Good afternoon, and welcome to KBRA's European ABS Renewables webinar. While all attendees have joined in listen-only mode, we encourage you to engage with our speakers through the Q&A feature on your control panel. Ratings and additional research, including the landmark Golden Ray transaction, Europe's first publicly rated solar ABS deal, can be accessed through the Q&A code on your screen. A forward schedule of KBRA's upcoming hosted events and conference participation is available on our website at kbra.com. Should you have any additional questions on the topics discussed today, we are always available for a follow-up call. Now, I'd like to hand things over to our moderator, Killian, for introductions.
Well, welcome everyone. I'm Killian from the ABS team here at KBRA Europe, and I'm delighted to be moderating today's panel. First of all, I'd like to say how happy we are to have you all here for what promises to be an engaging and insightful discussion on the ever-evolving topic of ABS renewables. We'll be diving into some key topics today, from recent transaction activity, as Michelle mentioned, to ongoing investor motivations and rating considerations, and importantly, what next for the market across renewable asset classes. Just to give you a quick sense of the planned running order for today, we'll kick off with an inside look at the recent NPAL Golden Ray deal, the motivations behind it, and what others can learn from the experience. Then we'll hear from the investor side, with the EIB sharing what drew them to this deal and how it fits into their broader strategy. We'll also get KBRA's perspective, what stood out and what made this transaction unique, and how they view the risks relative to the many US transactions that we've rated. Naturally, it's important to consider what lies ahead, what next for solar ABS, and what's happening in the other renewable areas like heat pump financing and the developments and the very pertinent developments in the auto space, particularly in relation to volatility for residual values in electric vehicle-backed powertrains. As with all KBRA events, I'd like to encourage everyone to jump in with questions throughout. We want this to be as dynamic a conversation as the webinar format will allow. I'm particularly conscious that we have a wide community of investors joining today, and I'd like to encourage that community to actively participate with questions to ensure we capture their perspective in this overall discussion. To aid us through these topics, we have an absolutely fantastic panel with us today, and I'd like to invite Gregor from NPAL, Eric from the EIB, Gordon from Barclays, and Karl from KBRA to quickly introduce themselves. Gregor?
Yeah, thanks everyone for dialing in. I'm very happy to be here today. I'm Gregor. I'm heading the refinancing at NPAL. I've been doing this for the last 5.5 years. We've built up the refinancing structure from scratch, essentially, with, I would say, the highlight of the Golden Ray deal at the end of last year. So very happy to be here today, and then handing it over.
Hello, everybody. My name is Eric Wallin. I'm a loan officer at the European Investment Bank. You probably know us. We're the world's largest supranational investor, multilateral development bank. Green financing is really at the heart and forefront of what we do. We invested in the NPAL Golden Ray transaction, which executed the market. I'm very happy that we did that, and I'm very happy to share my experience around this transaction. Thank you very much.
Thanks, Eric. Gordon Beck here. I run a business called Corporate and Sustainable Securitisation at Barclays. We provide asset-backed financing across a range of different sectors, but renewables is a key part of that. I've been working with the likes of Gregor for over 4 years now in trying to build out the renewable ABS market in Europe, and look forward to speaking with you about that today.
And my name is Karl Cummins. I'm a structured finance analyst within KBRA, working out of the Dublin office. Prior to joining KBRA in 2021, I worked with a large commercial bank where I was responsible for originating and structuring securitisation transactions in a variety of asset classes.
Right, thanks all. Gregor, let's jump in. Could you talk us through the recent NPAL transaction, why you pursued it, I suppose, the key benefits, and its role in the broader funding strategy for NPAL?
Absolutely, Killian. So maybe it's to start with, I guess it's quite important to understand kind of how refinancing works at NPAL and why we kind of did it the way or do it the way we set it up. So one of the reasons, as NPAL, NPAL the leading provider of solar and heating solutions in Europe, one of the reasons of including a refinancing solution in the first place was, as one part of the vision that under which NPAL was set up, we would like to make the transition to renewable energy and renewable heating as easy as possible. And for that to happen, clearly it's all about costs, right? Residential households don't have that much of excess capital available. So the vision was to ideally match the monthly cost that households have today with the cost, or ideally undercut that cost even with our monthly installment that we've the monthly installment of our refinancing solution. So that was kind of what has driven us initially, kind of making the costs match, or ideally making customers save from day one. And that's why in 2019, and let's go maybe back in the chronology to understand where we're coming from. In 2019, we've introduced the Solar Lease as a product, which was a full service product for residential solar. It was there was high demand for that product, also because it for the first time enabled customers to, instead of purchasing a system for 25,000 euros, have a monthly installment of around 150 to 200 euros, which, as mentioned, ideally matches the previous cost they had without PV system. Originally, we used project finance as a tool, also as origination volumes back then were considerably lower. So it just didn't make any sense to set up a securitization from scratch. Back then, we were talking about less than a million of origination volume a month. But then, since we grew, we ramped up our book, and in 2022, we for the first time introduced the solar loan as a solution. And the solar loan really, the vision behind the solar loan was to add more flexibility to our product, allow customers down payments and prepayments at any point in time. And this was set up as a securitization from scratch. So basically, we switched kind of the framework, and we now use securitization as a tool, which was also enabled by a much larger origination volume, which we had at that point in time. We were then talking about 50 to 60 million euros a month, which then ultimately, 2 years later, has led us to do the first public deal on residential solar in Europe, the Golden Ray 1 transaction, which was placed in October 2024. Which kind of is, I would say, kind of the last highlight in a journey of becoming more and more cost efficient across our refinancing across our cost stack. And effectively, what it has allowed us to do is to, over time, we've constantly decreased the cost of capital, and allowed, basically, this has allowed us to offer an even more attractive product offering to our customers. And then, just kind of to the bottom line as to why we pursued a public deal. Well, essentially, it has, from a cost perspective, allowed us to lower cost of capital by over 30%. Just that last step of accessing public markets. Embedding this into the broader funding strategy that we're pursuing. We today still believe in a diversified funding strategy, right? So it still includes an element of project finance, it includes securitization, and it also includes private and public distribution channels, simply because as a business model, we are very much reliant on the sources of capital and on the embedded financing as part of our product proposition. And therefore, it is important to also de-risk the operations there.
Clear. And I think, interestingly, and I know we have a number of potential new issuers or new originators on the line today as well. I suppose, what was the process like this end of it? Was it any key challenges or lessons learned throughout the whole public securitization train?
Certainly, it was I would say, an eventful journey, a rewarding journey, and it ultimately started already back in August 2023, when we started engaging with, for the first time, with rating agencies, when we started engaging with you to discuss the asset. And it was, again, it was quite a journey. So basically we started more than 12 months in advance. We then spent around 9 months of kind of education sessions with you to understand the asset better, right? Residential solar as a blend of different features, right? We talk about a bit, you know, it has characteristics of a consumer loan. It also has characteristics of a mortgage. Ultimately, it is solar. So we spent quite some time kind of getting you up to speed on the asset. Then we spend another 4 months of intense structuring, right? So here again, we're defining an asset class, so we need to really be sure we do it properly. So here, you know, key considerations that we had were, you know, what legal tenor do we assign to that note? What first optional redemption date do we structure? Kind of what sequence of forwards do we put in? What is the tranche? Should the tranching be looking like? So those questions really kind of, they were key, and we had to do it right. Well, then kind of, I would say kind of the accumulation of all these efforts was the placement. And the placement was particularly exciting, I would say, for maybe 3 reasons. Number one, because initially, you know, it became quite a nerve-wracking exercise, since there was no benchmarks available, and this was the first time this kind of asset was placed in the market. Pre-IPT, so pre-pricing indications, there literally was no real orders. So it was really kind of, you know, it was a bit of a cliffhanger. We were sitting there waiting for indications to come in. There were literally none. So we had to go out with first indications, pricing indications, which then kind of opened the gates, and there was a flood of orders coming in, which allowed us to kind of then tighten quite a few times. And ultimately, we ended up with a transaction that was at the peak up to 9 times oversubscribed. So I think it was quite a successful placement in that regard. But then, as an additional, I'd say, nail biter, we had the US elections as a long stop, beginning of November. So that was not really the intention when we went to market, but it just kind of added some, I would say, added some tension into the process. But then again, in a very time-efficient process of around about 10 days in the market, we were able to place this quite successfully. So I think kind of overall learning, I would say, is plan well in advance. It's going to take, you know, at least for this kind of asset, it has taken us more than 12 months of preparatory work to get there. And then ultimately it can be quite an exciting exercise to place this. But I think ultimately it was very successful and quite rewarding.
Really appreciate that feedback. Thanks. Eric, if I turn to you for a second, the EIB, as we know, was an investor in this deal. Perhaps you could share your motivation behind participating, how it aligns with your broader mandate, and your approach to risk in this sector. It actually ties in, and great to see questions coming through with what are the kind of 3 considerations from investors when we navigate this new sector. So it all kind of feeds together. But I'd like to focus a little bit on your own specific motivations, or the EIB's motivations behind entering this particular transaction.
Yes, thank you. So for the European Investment Bank, green financing is really at the core of what we do. So we saw a historic opportunity here to be involved in the first public European solar ABS and to be involved in this transaction. And so we spent quite a lot of time with NPAL and also others who supported this transaction to really understand what we're getting into. Eventually, after a lot of detailed due diligence and a lot of considerations, discussion externally and internally, we acted as the anchor investor in this transaction, and also our subsidiary, the European Investment Fund, provided the embedded guarantee wrapping the senior A1 tranche. This was a very good transaction for us because it fulfills some of our public policy goals, such as contributing to the European capital markets. However, there were a lot of different internal sort of obstacles or discussions For example, this is a new asset class with tenors up to 25 years in terms of the underlying contracts, and we did not have data for 25 years, and we did not understand how to model it for 25 years. However, through a lot of internal due diligence and external due diligence, we managed to model this comfortably in our own way. So this is obviously something you have to keep in mind as an investor. As mentioned, this transaction ticked a number of different high-quality boxes. It contributed a lot to our public policy goals, such as supporting renewable energy, climate action, sustainable housing. And it's something historic that we are very happy to be involved in. And I should also mention, while the asset class and underlying is really ticks all of the boxes, it's actually also the use of proceeds, how this financing, how this purchase of the bonds will contribute to new financing, which is really the key fundamental reason why we are involved in this. But as mentioned, we're very happy with this transaction.
Thanks a mil, Eric. Karl, if I turn to you from a rating agency perspective, was there any unique aspects of this transaction that you needed to consider?
Thanks, Killian. So the collateral is equivalent to a consumer loan, albeit with a long maturity. And as Gregor alluded to, may be considered not incremental debt, but displacing an energy bill with improvements made to the value of a home. However, one of the challenges with this new asset class in Europe is the limited performance data on receivables that may have terms as long as 25 years. Additionally, the data may not show how performance will be impacted if the customer is required to perform additional maintenance, for example, replacing inverters. If system efficiency deteriorates, or when new technology is more desirable or more efficient than existing technologies. So in rating Golden Ray, KBRA drew on its experience from rating this asset class in the US. It utilized early performance data from NPAL going back to 2020, as well as leveraging proxy performance data based on studies that were conducted to analyze the default behavior of German individuals based on Schufa credit score. Almost all German adults have a Schufa score, and this is a metric used in NPAL's underwriting. KBRA also considers the various attributes of the product, such as correlation with home ownership, the interest rate compared to other consumer lending products, possible feed-in tariff benefits, and the value proposition, while also considering potential additional losses to account for mechanical breakdown. We also consider the collateral unsecured due to challenges with and ultimately cost effectiveness of recovery of the collateral. And maybe finally, from a structural side, while the pool was static with sequential payment, which was positive for the structure, we did need to consider the fixed rate nature of the collateral compared to floating rate debt, coupled with the ability of customers to prepay without penalty at any time, and the hedging features within the transaction, including a banded swap and interest rate floor.
Thanks, Karl. And thank you all for giving us that kind of insight into the transaction. If we move, I suppose, into the opportunities in the broader solar space, I suppose, first of all, Gregor, looking at NPAL, what are your kind of plans in securitization moving forward? And how do you see the competitive landscape evolving across different European jurisdictions? It actually ties in, and I'm not sure if you're the right person to answer this, but one of the questions from our audience is who else in Europe can replicate NPAL's success? Do you see any strong competitor in the markets you're operating that has the scale that you have that could potentially, and we'll talk to Gordon later on about broader opportunities in the market, but maybe you could deal with that question and just give us a kind of sense of where the competitive landscape is at the moment.
Absolutely. Yeah, well, maybe let me start with kind of our plans and what we have in the pipeline. I guess kind of one key consideration or one key objective for us for the next kind of 12 to 24 months, and actually also the last 12 months already, was to diversify our product offering, kind of be even more diversified, not only be a solar company, but also be a heating company. And then also build our energy platform, right? So you have to consider kind of the hardware that we're installing is basically just kind of the base for everything else. And there's additional value-added services such as a virtual power plant that can be operated on the base of the existing hardware. So there's kind of a lot of additional, more software-driven businesses that you can build on top of that. So I guess kind of those two pillars are key are part of our vision and the kind of key objectives of the next of the months to come. Having said that, in 2024 we already kind of executed on some of that by starting our heat pump offering. So basically, we've launched our residential, the heat pump as a product. Again, refinanced through a heat pump loan. Here we saw very strong growth. So we basically went from pretty much zero at the beginning of the year, to more than 5,000 installed units at the end of the year, which, at least by then makes us the largest in Germany. So we saw very strong growth, and we expect to see further strong growth there. I guess another initiative that we launched was to go live in the Italian market, also back in early 2024. And we expect further markets to follow, right? So kind of slowly driving the European expansion is also part of our strategy. However, what you have to consider, and I think that's not a secret, that 2024 was quite a difficult year. There were strong headwinds across multiple jurisdictions. I would say particularly strong headwinds in Germany, with multiple players leaving the market or going insolvent. So there was really kind of quite a heavy price competition going on, and we were able to defend our price book, and we did not concede there. But in the contrary, actually, we gained market share, and we probably increased our market share from around 7 to now 10%. But it was quite a difficult year, and we now basically launching into 2025 and also 26. I would say in a position of strength, or out of a position of strength. However, we do need to see more issuers in that space to really develop the market, right? It can't be an NPL only market, so we're really keen for other issuers to follow our example. We certainly are targeting to become a regular issuer, which we believe is one cornerstone of establishing such a market. But then again, if you look into the European, if you look in kind of also across other jurisdictions, I guess in the UK there's quite some promising businesses evolving that could potentially do the next. Could also do public deals. I guess also in Spain we see certain players. So I believe really kind of ultimately it's a win-win. The more market participants we have in that space, the more issuers we have, the more time series and track record can be demonstrated, the better for the entire asset class as such. So we really hope that that more market participants will follow our example.
Great, thanks, Gregor. And Gordon, I suppose your perspective on this. We've seen a lot of activity in commercial and industrial and leaseback structures in the US. Do you expect similar kind of trends to emerge in Europe, and where do you see kind of the next post-solar loan activity, both from a jurisdictional and asset class perspective, developing?
Yeah, thanks, Killian. And I definitely agree, first of all, with Gregor in terms of it being good for the overall market to see more issuers and a diversified spread of issuers come into the market. And I would tend to agree with his analysis around sort of Spain and the UK probably being two of the more likely next candidates beyond Germany from a jurisdiction perspective. We do feel sort of quite positive around the potential for an increase in commercial and industrial, or C&I activity in the solar market across Europe as well. Maybe just to take a step back to kind of contextualize that market, across the US and Europe, that market is something around 140 gigawatts this year, which is roughly the same size as the entire residential market that people are, I guess, more familiar with. And in the US, we have seen 3 C&I solar ABS transactions, including featuring community solar from a couple of different issuers. And we do expect in the US to be more transactions and more issuers this year entering that market. As a result, we do expect that theme to translate into Europe. And from an ABS financing perspective, as corporates and SMEs continue the rollout of solar and other renewable energies across their estates in the same way that individuals are doing for their households, we do expect to see more activity. At Barclays, we've already done one private financing transaction where we finance C&I alongside residential exposures in sort of two slightly different structures. And we're working on a first sort of pure commercial and industrial transaction here in the UK as well. In terms of the drivers, I guess, for this rollout and this increase, they probably remain, a desire from corporates and SMEs to improve their energy consumption profile, improve their sort of use of renewables, despite some of the negative headlines around ESG recently coming across the pond. That remains a key driver. But also it's important to remember that pricing is now a strong driver for the use of renewable power and solar in particular, compared with other forms of energy as a result of the evolving sort of dynamics in the market and the price of PV systems. If we look at what's called the global levelized cost of electricity, i.e. the sort of average cost across markets globally, in 2015 for solar, that was approximately double the cost of coal. If you roll forward to now, 9 years later, that cost is a fraction of the cost of coal. It's only 60% of the cost of coal. So that downward trend in pricing, as well as sort of the broader thematic, gives people a strong incentive on the corporate side to roll out this technology.
Great, Gordon, thanks. And in terms of I think we discussed before that some assets traditionally financed through project finance are now being securitized. Could you talk about that trend and what you're seeing in that space a little bit?
Yeah, absolutely. And Gregor's introduction was a fantastic example of that, right? And Karl started their business model focused on a lease model and utilizing project financing. They've evolved that to sort of diversify their funding sources over time and tap into the securitization market. I think it's important to remember when we sort of talk about renewable ABS, that the vast majority of exposures that we are sort of in the world that we are talking about, is certainly in Europe, are financed by project finance and other sort of infrastructure style financing. If you look at European renewables, the infrastructure financing market in 2024, give or take, was about 100 billion euros. The more ABS geeks on the call will know that's also the size of the entire ABS market in Europe, just in renewables infrastructure financing. So there is a big market for this in sort of project finance style. But ABS can be a good alternative to that, particularly once assets become sufficiently developed and cash flows are online. Obviously, there are some very strong similarities between the two types of financing. They both typically use sort of SPVs to house the assets. They both have strong covenant packages aimed at looking at the assets. But ABS tends to focus more particularly around the cash flows of the receivables, and of course it has to sort of deal with the securitization regulation. But in turn, it can allow issuers to access higher leverage levels over time, particularly in an ABS takeout style format. In solar specifically, some other differences you might see between the two forms of financing. In ABS, sometimes you can see that issuers can get credit for longer term cash flows, so longer term PPAs, for example. Whereas project finance tends to be a methodology that's probably better suited where you have some specific focused, very strong cash flows, for example, those with some sort of government wrapper. And then finally, I'd just say outside solar, we also see this sort of dynamic of project finance versus ABS in other areas in renewables. You know, we've had a number of discussions around, could we see a first sort of ABS financing in onshore wind, for example, and then further afield from renewables, you see the dynamic in digital infrastructure, in data centers, and others. So I do think it's a topic that's sort of here to stay, and what issuers and borrowers really need is a kind of combination of solutions in exactly the way that Gregor outlined.
Thanks a mil, Gordon. And I suppose finishing the journey of solar, Eric, maybe you could talk about, I know you guys invested in another solar rooftop transaction in Poland. Could you briefly discuss that deal and the rationale behind your investment in that one?
Yes, so last year we participated in one more green solar ABS. That was with a small Estonian bank, Inbank, which is active in the Baltics and also in Poland, and it provides financing of PV installations to private individuals. What we did in this transaction was that we provided an SRT, well, synthetic securitization, guarantees of the senior and MES tranches in this transaction. So that provided capital relief to the bank, obviously. This transaction, again, was fully in line with the EIB's public policy goals of supporting sustainable housing, renewable energy, climate action. In this transaction, the tenors were not 25 years, but rather 10, not 25 years, but rather 10 years. So for us, the data analysis was slightly simpler, and that made us a bit more comfortable. However, what should also be remembered and pointed out is that synthetic securitization in itself is simpler, slightly simpler to execute than a true securitization. So not as complex as the golden ray transaction. And as mentioned, we managed to close this last year, and it's fully in line with the EIB's public policy goals, and it's something we are very supportive of, and we could look at again.
Really appreciate that, Eric. Thanks. And then I suppose moving away from solar, and I think, Gregor, you started alluding to, I think we're seeing activity in home improvement, such as heat pumps and then vehicles as well. If I just focus on the heat pump, do you see a big opportunity there, Gregor? I think you mentioned it earlier that there has been growth. And is this an asset class that you could see yourselves adding on to a kind of a securitization of solar, you know, as part of your bundle of product when you think of loans into the future?
Absolutely, Killian. And it is pretty, you know, to us, it's pretty evident that heat pumps are a major growth opportunity, and not only in Germany, but actually across the continent. So again, we started in 2024. We started our offering, saw very strong growth. Expect to further see strong growth. So it will be really one of the growth pillars of the firm, going forward. And if we mention we're looking at at European expansion, we also look at European expansion from perspective of heat pumps, so not only solar. So certain jurisdictions you might be more interesting for solar, where you have high prices of electricity and ideally a lot of sunshine. But then again, there's other jurisdictions where heat pumps might be more compelling, in particular when prices of electricity are low. So it's quite a kind of complementary offering. And yes, so this will be certainly part of this is part of our refinancing structure, and it's rather likely to also have heat pumps in our next public deal. So that certainly is the idea. I would say, heat pumps is one unit. I think another interesting business that we see picking up, and also that's part within the NPL universe, is smart meters. And here again, kind of the rollout of smart meters and the regulation requiring a further rollout of smart meters. This will also be some very interesting segment to follow, and could also be suitable for securitization. So that's also a segment where we see strong growth. We see regulatory tailwind, and I would expect also to have the one or other business emerging within that business.
Right, appreciate that. And Gordon, I suppose from your perspective, what are you seeing in kind of outside of solar opportunities across Europe like heat pumps, etc.? Are you seeing activity in that space in different jurisdictions?
Yeah, we certainly are, Killian, and I think heat pumps and heating technology more broadly, if I can call it that, is probably the key theme. Which makes sense. Heating is the largest component of household energy usage that will be most impacted by the transition to a lower carbon economy. So that is clearly the area that people are focusing on, and rightly so. On our side, we have done one financing in the UK focused on sort of heating systems, gas boilers, and heat pumps. We're in the process of executing another such financing elsewhere in Europe. But I think most players, to Gregor's sort of point, are diversifying. They're realizing that success here in terms of building a sort of truly full range business will be in offering different energy solutions to their customers, and in particular gaining the efficiencies that come with tying these different technologies together. So the benefit of solar is only accentuated if you have batteries, if you have an EV charger, if you have a heat pump. That type of interplay between the different products, I think, is likely to lead to more players being sort of more having more products within their stable. I do think probably the one piece that for the moment remains a little bit off to the side, but we could see development there is sort of electric vehicles themselves. Clearly, a lot of what I would call renewable energy players have EV chargers within their product set. Electric vehicles themselves, perhaps a little bit separate. It wouldn't be totally unfamiliar territory for there to be a bit of a crossover between electric vehicles and solar. The first ever solar ABS came out of Tesla back in 2013 in the US. And so whilst there isn't, I guess, an immediate path or need for those two things to interact, again, when we think about the customer's home more holistically, adding that EV component, possibly using the EV, with a smart energy system, with a smart meter, using the EV as a battery, those types of considerations do come into play. Obviously, EVs themselves have different types of challenges, but I think they're the main areas that we see sort of expansion beyond solar.
Great, thanks, Gordon. And it's interesting you brought up EVs, because I suppose there's a lot of discussion within the electric vehicle and how that's impacting securitizations. Karl, I suppose in terms of residual value realizations, electric vehicles seems to be a powertrain that's very volatile at the moment. How do you, as a rating agency, consider those risks? How does KBRA look at those risks at present?
Thanks, Killian. Yeah, and maybe as a refresher, so following the post-COVID surge in used vehicle prices, which was driven by high demand and supply chain disruption primarily, the market has seen a significant correction. This was particularly pronounced for battery electric vehicles, which are now substantially below post-COVID highs. Where this is relevant is auto lease transactions, which can include a residual value as part of the securitized collateral, as well as certain auto loan transactions, such as PCP contracts, where borrowers have optionality to return the vehicle at maturity in lieu of making a final payment. A decline in used car values can also directly impact recovery rates in the event of default. At KBRA, we track monthly performance of used cars across Europe and the UK, segmented by powertrain. Given historical trends, our market value decline assumptions are more conservative for electric vehicles. However, we also do assess each transaction and originator individually, considering factors such as the diversity of a pool by powertrain, by make, by contract distribution, as well as the residual value set in policies and historical performance of the originator. We do see jurisdictional differences. We see more volatility in certain jurisdictions. It kind of depends on adoption levels and overall market size. And also servicers may have some flexibility to partially mitigate RV exposure throughout a contract life, such as adjusting for excess mileage, for early or late terminations, or applying charges for unfair wear and tear. So we take all of this into account. And I guess we have seen used car prices stabilize somewhat over the last few months, but it does remain quite a nascent space.
Thanks, Karl, and thanks, panel. I think we've done a pretty much whistle-stop tour there across a lot of renewable asset classes in Europe. So thank you all for your feedback on that. We've got a lot of questions coming in, so I might do a kind of a quick fire and try and get through a few of them in the next 5 minutes. So I'll throw the first one at you, Gregor, and conscious of timing, how much of an improvement, if any, did you see in your cost of funds unit economics following the public deal?
Yeah, that's an easy one, and it's a bit more than 30%. So really worth the effort to access public markets.
Great. I suppose this is in broad. I may throw this to Gordon or even Eric. Well, to what extent do you see evidence for green premiums across recent renewable ABS issuances? Is there a green premium there, Gordon? I don't know if you have any view on that.
Yeah, happy to take it. I think it's very difficult to measure a precise green premium because we don't have a sort of, non-green and a green that both look similar. I think what I would say is transactions in renewable energy and other what we call pure play green sectors just attract a very broad range of investor demand. So, whether that exactly results in basis point numbers, what it definitely does do, to Gregor's sort of description earlier, is allows you to build momentum in the process, and that then helps with sort of the overall pricing, but very difficult to put an exact number on it.
Right, thanks, Gordon. And another one for you, Gregor. Before securitization, what type of funding was supporting your business? I'm just running through as many of the audience questions as we can.
No, that again. So previously we used project finance as means of refinancing, simply because the origination volumes weren't there. And I would say for kind of nascent businesses, it probably makes sense to, if they are asset heavy, to initially look at project finance as means, and then to transition and diversify over to securitization once origination volumes allow for that for these structures.
And Eric, a quick one from you as an investor. The question is twofold. I can answer the first one. Was the NPAL ABS backed by loans or by leasing? It was loans, essentially. And how do the investors get comfortable with long maturity and extension risk? I don't know if you have any comment on that from an investor perspective.
As mentioned, the 25-year tenor really goes far out from the data that we've seen. And essentially, it was then a question for us to try to understand how we can then extrapolate and make some assumptions about, based on the data we had and until the final maturity. We understood that the default risk was really at the beginning, and after that it sort of flattens out. And it was then probably a question of us getting comfortable around certain assumptions there. And it did create a bit of internal discussions of how to really do that. But I would say with the help of other sort of players in the market, including understanding a bit of how the rating agencies work, we finally became comfortable with our assumptions.
Great, thanks. And speaking of rating agencies, Karl, there's one here for you. How did you tackle the lack of historic data? Had the rating agency requested tighter eligibility criteria or covenants?
And I guess the answer to the latter is no. It was a static portfolio, so we knew what the portfolio looked like. The portfolio was segmented by Schufa score. And yeah, part of that was looking at early performance from NPAL. Early performance is quite a strong indicator. We also had the benefit of 2 studies that were commissioned looking at the performance of how a Schufa borrower performs on with segmented by different credit grades. And as mentioned, NPAL kind of do have that information by Schufa score. It's part of their underwriting. So that those studies were helpful in kind of assisting us establish proxy base case assumptions of default expectations for this pool. It's a similar approach that we took to when we first rated US transactions about 10 years ago as well.
Right, appreciate that.
And we look obviously at the attributes of the product. So, yeah.
I'm very conscious that there's lots of questions coming in. I've tried to summarize them, and thank you all for your answers there. I'd like to thank you all for your very insightful feedback. It's I suppose enlightening, but also heartening to see that there is opportunities in this kind of emerging asset class within Europe. So on behalf of KBRA, I'd like to thank Gordon, Gregor, and Eric, and obviously thank my colleague Karl for joining us today. I think Michelle has posted the various links, etc., to our research, and future webinars, etc., will be forthcoming. I know we are planning on having a solar symposium later in the year, a symposium where we discuss these matters as we have done heretofore. But on behalf of all of us at KBRA, I'd like to thank our panel today. Hopefully this is an asset class or a general environment and ecospace that continues to grow in Europe from an ABS perspective. So thank you all for joining us today.
Thanks, everyone.
Thank you.
Appreciate it.